Good afternoon, everyone. Welcome to the Trading Coaches Playbook. Brandon Waddell with you for this Friday afternoon or morning, depending where you are. So, welcome. Go ahead and kick this off with a quick reminder that we are not broker-dealers or investment advisors. So, we're going to look at the markets from an educational standpoint, which means I'm not telling you to buy, sell, or hold anything in particular, giving you personalized recommendations about the markets. All markets do involve the risk of loss. This is always a situation we can never eliminate the risk. We just try to minimize and manage it. We're also not subject to trading restrictions. So we have position this security or initiate one at any time. So yeah, happy Valentine's Day to everyone out there. Hopefully with a special person or happy with yourself, either way. Um, yeah, so keeping busy here. Basically, I am in charge of a couple of different programs for the Wealth Builders HQ. The main one is the E-mini Think Tank, which we meet 3 times a week, Mondays, Wednesdays, and Thursdays, except for this Monday because we actually have a holiday coming up. Um, but basically, we take a look at the markets on well, futures markets specifically. Sorry, hang on. My other Valentine, Lucy, wanted to come up and say hi. She's actually recovering. She was sick and now feeling much better. Aren't you, baby? Good girl. Anyway, she was whining right next to me, wanted to come up here, get attention, of course. Anyway, as I was saying, the E-mini Think Tank is a program that I run where we identify opportunities and dissect the futures market on a regular basis. There's a lot of on-demand education as well as live education that we do, like I said, when the markets are open, 6 hours a week and beyond, actually. So, like I said, pretty much the programs that I run, the way I do them is twofold. One is um, on-demand education, so you can absorb it. And we're going to go over some of the basic stuff from some of the education today. And you can see that if I go into, this is the Mini Think Tank program. You can click on, well, there's class recordings. All the classes are recorded, so all the live sessions are there. But basically, I start off with education, and I'm redoing all these videos right now. So all this new stuff is going to be posted very, very soon. New documents, redoing everything and simplifying it. So basically, you can see that I have things like trends, how to identify trends, trading routine, finding zones, and there's documentation that goes along with it that supports all that information and helps you learn how to identify opportunities in the futures markets. And then we meet up on a regular basis. And basically, the way we start off every session is like this. Let me get one of them open here randomly. Am I still posting on X? When I can. Um, it's just just been busy, so I haven't been able to. But basically, I post trade ideas and I email these out to students every single day. Some of them happen, some of them don't. You can see that I actually had a win here. We hit a trailing stop along the way. This was no entry, and another winner with a trailing stop. So every 3 days a week, as I said before, these trade ideas are sent out to students, and I actually go over them in the class, and I do all the detail on that too. It's an educational program, so I have, how we would identify different levels based on color in the charts, and I show you not just, okay, here's a trade idea. We're going to go long on the 60-minute chart of the Aussie, but for you to be able to learn what the trade looks like and identify the zones, I actually put in the picture there as well for each one of these trade ideas. So it gives you that opportunity to learn what to find in the markets and where to find opportunities and how to find the opportunities. And then we trade them together. So it's kind of cool. And, if you're interested in joining, the link is there for you. If not, that's okay too. Actually, erase that. And yeah, so that's the E-mini Think Tank program, as I mentioned, and Andrew put out that link. But yeah, I'm going to be posting again on X and other programs as soon as I get time to. It's just one of those things. I've been really, really busy lately and just haven't had a chance. But yes, I do plan on starting to post things again, ideas and just information about the markets. So getting into Trading Coach's Corner, one of the things I said I was going to talk about today, and the topic for today is back to the basics. And let's bring up a chart. Here we go. And hang on a sec. Okay, Lucy, I gotta get something done. There you go. Good girl. Anyway, so when it comes down to reading price, and that's really what we're doing when we're looking at the markets, we're trying to read price and identify where is price going to go. What's happening now, what's likely to happen in the near-term future, or even long-term. For instance, I'll do crude oil. What happened there? And I'm on a 15-minute chart. And basically, we're trying to predict the hard right edge. What's happening in the future? What's likely to happen in the future? What's the most possible outcome of price? And if we think it's going to go up, we buy. If we think it's going to go down, we sell. Pretty simple, right? Well, the problem is trying to figure out what is likely to happen. And I practiced for many, many years doing what's called the hard right edge game, where basically I would just go back randomly at some point, enlarge my chart, and just try to guess what's coming up next. And based on the information I see on my chart now, what's coming up next. And I also would look at where there were big turning points in price. In this case, we're kind of drifting very softly to the downside, but eventually the trend will change. And when we get a major trend change, there's often warning signs before it happens. So we're starting to get a little bit of warning right here that we might be bottoming out. It's kind of a soft bottom. So I don't know if it really, yep, it did turn around. So when I see something like that, where we were moving in a nice downward trend direction here, we changed and then ultimately started moving back up a bit, right? Now, it was a short term, wasn't long term, but is there something going on here that I could identify and maybe use over and over and over again to identify possible bottoming areas in a market? And my conclusion was, yeah, there actually is. The price on your chart, it doesn't matter what time frame you happen to be on. This is a 15-minute chart, but it worked the same way if I looked at a daily or a 4-hour or whatever time frame I wanted to look at. It works the same. And bear with me for one moment. Okay, my apologies. I'm back. I mean, I'm not apologizing for being back. I'm apologizing for being gone. Anyway, the question was, is there something going on here that would tell me, yeah, we might be turning at this point and getting ready to change direction or pausing? Can we predict future price action based on what we're seeing on our charts? And the answer is, yeah, we absolutely can. And when it comes down to the basics, there's really 4 key things that we want to focus on. And I'll go ahead and type this up right here. They are actually reading price. And let me fix this. There we go. So number 1, color. Number 2, shape. Number 3, size. And number 4, location. An extra space there. And the thing is, when you're reading price, you want to take into account all of these together. You don't want to ignore any piece. Hang on again. Like I said, you want to take them all into account. You don't want to just focus on one and ignore the others. And you don't want to get too hyper focused on just one and not the others. So it's a combination. And this is not perfect. All we can do is hope to find the highest probability. We're never going to be right 100% of the time. I always say with technical analysis, everything always happens except for when it doesn't. And that's true. These things follow through except for when they don't. So it's about the highest probability. And basically, when we're trying to predict price movement, it requires looking at all these. So starting off, color. And of course, if you happen to be colorblind, which many people are, you can change the colors. But basically, what I'm looking at is we've got two colors of the candles, red and green. And traditionally, green is a bullish candle, or it represents bullish pressure. And the reason why is because we're closing higher than we opened, right? So at a glance, if I'm seeing a lot of green, then we're probably in a bullish trend. If we're seeing red, that's bearish pressure, or a bearish candle. Okay. And yeah, it's pretty simple there so far. And we don't want to overcomplicate things too much. We want to keep it relatively simple if we can, because simple works. Simple is easier to follow. And if it rings true, then that's even better. We often tend to overcomplicate charting and trading, thinking that the more, because so few people are really successful at trading long term, doing this in their livelihood or for investing, whatever it may be, because so few people are really successful at it consistently. People think that it must be very, very complicated. And the problem is that it's actually the opposite. We overcomplicate things and it leads to our downfall rather than having success in the markets. So, one of the things we want to look for, especially when it comes to trend and trend strength, okay? Actually, what I probably should be doing is a Word document for this. That way I won't run out of room. There we go. And there we are. So yeah, this will make much more sense than trying to put it on the chart itself. Although I can do it both ways, it really doesn't matter. But now I'm a little bit more free to jump around here. Anyway, so when we're predicting price movement, we look at all these things. So color, number one, for trend and trend strength, basically, if we have a dominance, color, that's the trend. And it's strong. Okay, so if you're seeing the same color, lots of red or lots of green, then you're probably in a very strong trend. One thing to think about too, when I'm looking at the trends, well, the font's small, sorry here. There we go, keep forgetting. So one of the things you got to think of when it comes to trends and identifying the trends to begin with, you have to make sure you're on the right time frame. A lot of people skip time frames and they're not looking at what's actually influencing what they're trading on. So kind of a sidestep here, and this is one of the things I teach in the mini think tank, as I mentioned. I believe it's in my training routine of finding zones. I also have a new video coming out on it, but I use multiple time frame analysis when it comes to trading. So if I'm trading, let's say I'm actually affecting trades on this 15-minute time frame, what happens then is I need to know what trend is going to influence the zones on this time frame. Okay, and we're going to get to zones and everything else just in just a little bit. But for instance, here I identify an area of supply. This is an origin of imbalance where there's lots of selling pressure, not much in the way of buying. However, am I supposed to be entering a short there, or am I supposed to be going long? Well, what tells me what I'm supposed to be doing is the trend. It's dominant, depending on what trend we actually are in. And what people do is make the mistake of jumping from like a 15-minute chart all the way up to daily. And the daily trend is not the one that's directly influencing this. Going all the way back to the late 1800s, early 1900s, Charles Dow, and you may know him, Dow Jones Industrial Average. Um, anyway, he would say that the markets moved in waves, and that's also part of Elliott wave theory as well, which is very related. And these waves had a factor that they were related to. So I follow Dr. Alexander Elder's model, And Dr. Alexander Elders basically said that time frames are related by a factor of 5, plus or minus a little bit. So basically, if I'm identifying zones, that's going to be my lower time frame, or my zone time frame is what I call it, but it's lower time frame. Okay. And that I said is my zone time frame. Then what happens is I need to identify the trend. So the zones on the zone time frame, this tells me basically where to buy and sell, enter and exit. But the trends, and that's going to be my intermediate time frame. I call that my trend time frame. That basically gives me a direction of trade. It offers you the best direction for potential profits. So if I'm in an uptrend, this supply zone is going to be where I would be exiting positions, not where I'd be entering shorts, because I'd be fighting the trend by going short. If I'm in a downtrend, then yes, I'd be using this for an entry because I'd be going short, trading in the direction of the dominant trend. So there's a relationship between these two. And if we go too far apart, then it breaks down. The trend that we are trading right now is related to that zone time frame by about a factor of 5. So basically, I'll put a new text over here. That trend time frame is equal to the zone time frame multiplied by either 4, 5, or 6. Okay, and there's not one perfect time frame that always works. If I happen to be on a 15-minute chart, I might multiply by 4 because now I'm looking at an hourly chart. That's common time frame. I'm going to stick with the more common time frame. So I'm looking at the same thing as everybody else. If I'm trading stocks and I'm trading on an hourly chart, I might be looking at a daily chart because there I'm 6.5 hours. So it's times 6. But if I'm trading on a 15-minute chart, I would not use the trend from a daily because it's skipping too much. And the trend is not necessarily going to be influencing my entries and exits, my zones. So I want to make sure I'm trading in the direction of the dominant trend because that's the stronger, better move. I'll make more profits and have less risk than going against the trend. But I have to make sure I'm trading the right trend, and that is the trading time frame, the zone time frame that I'm on, multiplied by 4, 5, or 6. Well, trends don't go on forever either. Trends end. And that's going to be my higher time frame. And I call that my perspective time frame. And basically that signals the ends of the trend. Lets me know when I should be looking for a reversal in that trend. And in this case, that perspective time frame, or PTF, is the trend time frame, once again multiplied by 4, 5, or 6. It doesn't have to be the same multiple. So just as an example, perhaps I'm using zone time frame, trend time frame, perspective time frame. So I might be on a 1-minute chart, it's doing some quick trades. My trend time frame might be 5-minute. That's times 5. And then I might be using a 30-minute for the perspective. Okay, nothing wrong with that. Or I could do 10-minute, 20-minute, 30-minute, 60-minute, 90-minute, 1-minute. 90-minute. 1-minute. 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 1 60-minute, 240-minute. If I'm doing some sort of swing trades, I could do even higher. Let's say I do daily. Well, times 5, that's weekly. Times 4, that's monthly. There you go. So that way I'm looking at something that's related and I have the highest probable turning points. So if I take a look at this chart, and let's see, where do we have a big trend change? Right there. You can see we're in a bit of a downward move right here. I have to look to see if there's a trend on that. Let's go back to 60-minute or up to 60-minute. It's running a little slow here, sorry. What is going on with this computer today? Close a few things out. Okay. So here I am on an hourly chart now. And actually, we've got a couple trend shifts, one right here. Wait, that's not what I want to cancel. There we are. And even down here. Okay, so the reason why I marked those particular areas is you see right here, we're in a downtrend, and this is where we started turning around on the 1-hour time frame. Then we were in an uptrend, and this is where we started turning around and changing trends. So on this higher time frame, in this case, 60-minute time frame, if I go to the 4-hour, where's the trend changes? Right there and there. Okay. Get rid of the text here for a moment. There we go. So when we were in that downtrend, you can see where we terminated the downtrend was right here. Looking left, let's see, was that an area of demand? Because often that's where the trends will reverse. Well, it was actually in the area of demand. Right here on the 4-hour time frame, we have this several little levels here, to be honest with you. Okay. So this is that higher time frame demand area. And as far as overhead for trends shift, is this where it was? Yeah. Kind of punctuates the point right there, although that's kind of wide, but you can see there's a basing, there's a big drop. That's the supply zone. So this is from the 4-hour time frame. I've got demand and I've got supply identified. When I go down to that 60-minute time frame, we take a look at the trends. Here we were in a downtrend, and sure enough, where did that downtrend terminate? At the demand from the higher time frame. And then we're in an uptrend. When did that uptrend terminate? Once again, at supply from the higher time frame. That's pretty common. This is called the field of play, basically. So we're in an uptrend, let's say, from here, oops, to about here, right? And what we want to do, we've identified an uptrend on the 1-hour. As I mentioned before, we have 4-hour demand and supply. And those are going to be the ends of the trend. And now we just need to figure out, okay, where are we going to make our trades? Well, we're going to basically, because we're in an uptrend on a 15-minute chart, buy demand and exit at supply. That's what we do. Trade with the direction of the trend until the trend ends. So if I go down to that 15-minute time frame and we look around here, this is where that downtrend stopped. We started moving up. We're very low in the field of play. We have plenty of room until we reach the top of the trend. And I just look to see if there are any good demand zones that we pull back to get us long. That's it. Nothing great. Maybe it's kind of hard to look at it this way. Here we go. and overshot it a little and rallied up and actually came down to demand again. This one was probably better. I'm not going to get into all the little details at this point, but anyway, you can see that, yeah, this, as long as we're in an uptrend, when we pull back to demand zones, is where we want to buy typically. And we keep doing that until we hit supply from the higher time frame. Now, why did I do all that? Well, because I was talking about dominance of color and we're trying to determine the trend strength, I need to do that on the trend time frame. So basically, looking for the trend and determining trend strength, we would look at the trend time frame. If you have the dominance of one color or the other, that trend is strong and in that direction. There's going to be a sign of weakness. I wouldn't say usually, but often before price reverses. And that sign of weakness is going to be mixed colors. Colors get mixed, both red and green, back and forth, trends getting weak. So again, if I go back to my 60-minute time frame here, and let's go back to a random time, it doesn't matter. You can see lots of green, trend strong, red and green starting to mix. It's just one. Now we're getting a lot more, so we're getting some weakness. Picked up strong again. Notice one candle. Actually, I should do it this way at the hard right edge. That's a sign of weakness. Not too bad. It's only one red candle. Still moving up. Now we're getting two reds. We haven't seen two reds together since this prior pausing area. You can see we went down a little bit. So we're probably getting that weakness again. Definitely. Trends building up once more. Lots of green. Too much red. We're pulling back. Now, this is not necessarily the best way of doing it, but it is, like I said, one piece to give you an idea. Is the trend strong or is it getting some weakness? Lots of green, trend is strong. Sign of weakness coming in, mixed colors. So we might be getting close to a supply zone. If we are, then we're likely to possibly reverse the trend. If we're not near a higher time frame supply, then we're probably just getting a pause before we continue on. And as you can see, there's that weakness pulling back. Yep, it was just a pullback. Again, rallying up. Weakness again, and trend's trying to reverse at this point. So that's one thing that we can look at. Color. If you're, and like I said, this works on anything. Here I am on crude oil. I can go out to a daily chart and look at QQQ, the ETF. Let me clear this chart. And look at whenever, randomly. And we had lots of red, mixed colors. Trend was in trouble. Started seeing some more domination of green. Although not really, it's just back and forth. Now we're getting a lot more green coming in. This is more likely to run to the upside. There we go. More mixed colors, getting some weakness in the trend. Finally picked up. Still bullish. Definitely seeing weakness at this point. We had a nice little pullback. But before we got the domination of red, we had mixed colors, warning of the weakness. Now, one of the other things I look at is, this wasn't daily, it was hourly, sorry. Trying to go to daily. That's what I wanted right there. It works the same way. Again, domination of red, getting interrupted by a domination of green all of a sudden. A little bit of red peeking in. There's some weakness. It resolved itself to the upside. Here again, we're getting weakness as we get close to a possible peak and prices pulled back. So the markets like to warn you before they turn. When it comes to the shape, we get 4 prices on every candle: open, high, low, and close. The closing price is the most important. Basically tells us who won, bulls or bears. Okay. And we want to know who was in charge. So what I'm really looking at is I start measuring the distance from the low to the close versus the high to the close. And I should say the closing price. There we go. So measuring the distance from the low to the close versus the high to the close. Basically, low to the close is bullish pressure. Price could not close at that low. That got pushed up. If you look at the high to the close, that's selling pressure. There you go. So every single candle, regardless of whether it's green or red, tells you a little bit more when you look at it because of that buying pressure versus selling pressure. So for instance, if we take a look at current candles here, actually, sometimes you get warnings, sometimes you do not. Here we're moving down, but are we moving down very rapidly? Well, we're gapping down and we have some decent red candles, but there's bottom tails on those candles. Bottom tails, remember, the area between the low and close is buying pressure. If we're in a strong downtrend, you should not be seeing buying pressure. You should be seeing selling pressure. Well, here we lost most of the buying pressure is a very small wick. Next candle, selling pressure. So we opened, tried to rally, and the sellers crushed it. And we did it again. There is a little bit more buying pressure than it was before, just measuring from the low to close versus low to close. Now, this would suggest that prices are still going to the downside, although it's a bit weak altogether. Well, out of nowhere, we got nothing but buying pressure, and obviously that all got thrown out the window. So it's not 100% perfect. Typically, though, you'll get some warning signs before prices change direction. So notice here, we have very little selling pressures, almost no topping tail. Now we're getting a little bit more. Now we're getting even more selling pressure. The wick is getting bigger on the top side. Why is that a problem? The more selling pressure you start, the more selling pressure you start to get, the weaker that price is likely to be. And you're probably getting closer to a turn to the downside very soon. Okay. See what happens. Again, now we have a red candle, but it's still very bullish, but you've got more selling pressure than you've had in any of the other preceding candles, right? The distance between the high and the close is much greater than it was back here and here and here. So we are getting to an area we may be seeing a turn. And is that really surprising? This is an area where prices had turned in the past. As on the daily chart, depends on whether or not this is a trend or field of play, perspective, or zone time frame. But either way, we're seeing a bit of weakness in price. Even though there's still buying pressure, there's definitely weakness as the topping tails have gotten larger. Still having that selling pressure there, trying to hold on. Not as much buying pressure anymore. We got a smaller candle. And now we're starting to turn down. But as we turn down, first of all, this candle was a little bullish. Again, it was green. We have a little bit more movement between the close and the low than we do the high and the close. But it was kind of indecisive. This one's definitely bullish. That means even though we are pushing down, we're not likely to keep going down because there's too much bullish pressure trying to hold this up. And basically, you can almost predict the next candle in a way. Because we had so much bullish pressure, we closed very close to the high. We're more than likely going to be either green on the next candle or at least not make a new low. We're more likely to make a new high on the next candle. Well, definitely did. Broke out well to the upside. But wouldn't that be good to know before that happens? Again, on this day, even though we had a little pullback from the selling pressure and supply, this is telling us that we're done pulling back. We're going to have a big push up, or at least a new high. And sure enough, we did. Still telling us bullish pressure. There we go. Big jump up. Again, still lots of bullish pressure. Now things are changing. Red candle after a move up like this, that's a lot of selling pressure. Yeah. And moving along. Well, we had lots of selling pressure. Now we still have lots of buying pressure again. Just looking at the shape, this is suggesting that, we're pausing, not reversing. There we go. We actually did move up. Remember, I said there was lots of buying pressure there. Now, as we moved up, you can see we were met with a ton of selling pressure at this point. That's suggesting the next candle is likely to be downwards or make a new low because we have lots of selling pressure. We closed near the low of that candle. We went a little sideways. We did make a new low, though. So it did follow through. Now we got some bullish pressure. And actually faked us out in this case. It was still red, so there's lots of selling pressure and buying pressure. Indecision, we ended up pushing down more selling pressure. And we're just stuck sideways right now. Notice we got mixed red and green, so we don't have a strong trend in either direction. And consolidation, finally leading to our selling pressure. This is telling me we're going to most likely continue down. Didn't do it. Like I said, it's not always 100% perfect, but taking into account the trends, it'll give you an idea of how strong a trend is and whether or not it's likely to continue. You can even do this on currencies, as I was saying. Let's do AUD, JPY, Aussie yen. Where's it here? No, yen to Aussie. That's fine. I'll pick that one, I guess. What's going on here? All right, there we go. And I'll go to a 4-hour chart. Yeah, and on the 4-hour time frame, we can see when we reach up, when there's peaks, often you'll get indecision. When you drop down, you'll start to see bottom tails often telling you there's buying pressure before you start to rally. So there can be clues. Right here, we started rallying up again to the prior high. We had selling pressure here. We're getting selling pressure yet again, even though it's a green candle, the topping tail selling pressure, and we start holding off just a little bit before we're able to continue. So color and shape can give you an idea. Another one is size. These candles represent orders that have been filled. And by the way, one of the things I want to caution you of, I'm giving you some education on the markets and how to read price, but it's not all inclusive. It's not as in depth as I do in the classes. So if you like what you're hearing here and you want to learn more about this, then obviously I would love to have you join me in the E-mini think tank, because the education that I provide there is much more comprehensive. Instead of going over this stuff in less than an hour, you get much more time and you get to see practical examples of how we use this on a regular basis. So like I said, be careful. A little bit of knowledge can be a little dangerous at times. Don't want to be too overconfident, but it's where we start to figure out exactly what's likely to happen in the future. So when it comes to these candles, as I said, every single candle is a visual representation of all the transactions that have occurred on that security for whatever period you have the candle set for. So basically, it's record of all trades, put it simple, right? And if the candles are small, that means you didn't cover a lot of price action. You didn't move up much, you didn't move down much. So either if there's high volume with small candles, that means there was basically equilibrium. You had a lot of buyers and a lot of sellers battling it out, and you couldn't get anywhere because nobody had the edge. Nobody had the lead. If you get a large candle, that shows an imbalance. Basically, if you get a large green candle, there were no sellers in the area. In order to make transactions happen, you can't buy without a seller. So how do you attract those sellers that aren't there? You raise your price. The faster you raise your price, the more aggressive the buyers are being, and the fewer sellers there are, period. So when I look at these candles, I focus on two main overall shapes, if you will, what we call narrow range candles, or NRC. Basically, that's a candle. Yeah, that's spelled it. It's a candle with a very small range being the distance between the high and the low. It's a small range compared to the ones around it. So if it's with volume, it's equilibrium. If it's light volume, basically it's apathy. Nobody really cared. Mm, no one cared about the price in that area. Let's say a very tiny range. That's fine. So, we take a look at the market here and probably do something other than ALCN. Let's go back into say Tesla, the stock, and oops, your indicators. I can bring in volume. Say 60-minute. And every once in a while, you'll see things like this. Small range candles compared to the ones before it. Let me pull that to hard right edge. And we're getting those small candles with relatively light volume. That means that no one's really interested in trading in this area. We don't have a lot of buyers. We don't have a lot of sellers. We're just pausing right now. And that could be a pause before continuation, or it could be a pause before reversal. What's really going to tell us, and it's probably the most important out of the all four, is location. Yeah, which I'm not going to be able to get into detail in today, but that's one of the key things I talk about in my lessons under E-mini Think Tank right here, finding zones. I go into that in detail and actually even have a document under fundamentals here. There it is, leg-based zoning technique, where I detail how I actually find the zones and trade the zones. So location, that would be supply and demand. And this is the most important for price reading. Okay. But getting back into size, again, if we see small candles like this with very light volume, it could be a pause in price. Or if it's heavy volume, which I'll have to look and see, it means that we were equaled out. We had tons of buyers or tons of sellers, but they were evenly matched on the other side, and prices couldn't go anywhere. You see, in this case, we actually gapped up, retested the area, and kept going. So this was just a pause with the light volume. You usually don't see just one narrow range candle. They often happen with multiple candles around each other. So again, started up, rallying up right here. We get these narrow range candles. This one in particular with very light volume. It's almost like tossing something in the air. In my Blistex, I toss it in the air. It goes up with inertia, but then it's met with gravity equaling the inertia that died off, and then we get a reversal. So in this case, that's exactly what happened. Small range, narrow range candle, and it was just one with light volume, led to changing the trend. Nothing really yet, maybe a little bit here. These are kind of narrow candles. We got indecision. We rallied up and are pausing after a small pullback. So this may be where we start to change the direction of our trend, maybe resume the uptrend again. Oh, actually reversed and went down instead. but it was a warning sign that something was about to change in the trend. And you can see we accelerated down instead. So that would be a narrow range candle. The alternative, let's see, that's what I want to do. On. There we go. So when I'm looking at the range, it's the entire range from high to low or low to high, not just the body of the candles, but the entire thing. In addition to, well, the opposite of narrow range candles would be expanded. Or ERC. And this is a candle with a very large range. And this could be with heavy volume or not. It doesn't really matter. Honestly, a lot of times it's better without a lot of volume, but it doesn't really matter. It could be either. Location is a key thing with this. Okay, so if you get an ERC, starting a new trend. So say you were in a downtrend, you get this big candle to the upside. That's an ERC starting a new uptrend. Those are pros buying without, basically all the selling pressure was exhausted. Nothing to oppose them. So if you get an ERC starting a new trend as professionals, however, if you go in the same direction as the trend, that's the novices chasing. And typically the novices chase and catch price pretty much right when it's ending. So if you've got a nice profit going on a position and all of a sudden it really jumps in your favor and you get a lot more profit all of a sudden, you might need to book that profit and get out, which you're often likely to turn around soon. So actually, we have a couple examples right on my screen right now. Here, we're moving in a sideways trend. And then we get this big candle to the upside. Heavy volume. What does that tell me? We're moving sideways. We get a large move out of nowhere to the upside. That means that there was somebody wanting to buy, and it looks like they wanted to buy a lot because the volume is pretty heavy. Not always a good sign, by the way. But somebody wanted to buy a lot, and there was nobody wanting to sell in this area. So the only way they could get people to sell to them is by raising their price up quite a bit. Now, I'm not going to go into all the details now because, again, I teach this in my classes, but I used to work on the institutional side with the market makers and trying to get large orders filled for a hedge fund. And you would actually do what's called working the order or work the order. You would take large orders, break them into smaller, more manageable pieces to kind of fly under the radar and get your orders filled at a decent price. Well, if you get a big order, in this case, yeah, they might have gotten quite a few shares filled because it did move up with a lot of volume, but there's a very low probability they'll get all their shares filled the first go around. The institutions identify a range where they're willing to buy. Once prices leave that range, they stop buying. Novices usually take over. But what happens is there may be leftover orders once we come back because anybody who couldn't get their orders filled here will try once we come back to that area. So first of all, that's a sign that we've got pros who are buying near the beginning of that move, possibly even in the move a little bit, and high probability they couldn't get all their orders filled. So when prices return, the rest of the buy orders click in and we might be able to buy with them. In this case, it just held. Again, you have to keep an eye on trend as well. I don't know what the trend was, but if the trend was up, then this most likely would have bounced. Okay. So if we get that large range candle in the same, or sorry, starting a new trend, this one's kind of iffy, but you see, we were moving sideways, kind of sideways channel through here, right? And then we broke out with a large candle, expanded range candle with high volume in this case. I'd prefer it to be low volume, honestly, because again, if this is high volume, there may not be a lot of leftover orders here. Because we might have gotten all their orders filled. But with the low volume, there still may be a bunch of orders waiting to be filled in that area. So when we return, you can see we couldn't even quite hit that, and we stalled shy. Now, as we're moving down, that's not the best example. You got obviously big candle here to start the move. Medium range, medium range, medium range, a little bit bigger than the other candles here. That's novices chasing price, especially as it broke these lows. They're trying to get in late and chase, and prices usually bounce and shake them out. They do it again right here. Not as bad, volume's less, but think about that. Anybody who sold during this candle, they're selling after prices have already moved down, and they have stop losses right above. Well, look what happened. Stopped them out and then went in their favor. It's pretty common. There's actually strategies that I've created. I think they're in, whoops, wrong spot. Where is it? No, that's not it. Documents. I have whole strategies created on this. I'm not sure where it is right this moment, but I have novice candle strategies that I created just based on taking advantage of those novices jumping in at the wrong time and chasing price, getting shaken out, only to have the professionals take their money. And it just happens over and over and over again. So let's see, do we get any other examples? Pros buying, ended up not really holding too well. I mean, here, this is another possible example where we're going a little bit of a pullback. And again, we got this bigger candle, bigger range. It's not just the body, it's the range. It's a large candle to the downside. So near the beginning of this area, there's probably some selling pressure. You can see we couldn't even get up to that area again before it started dropping. And finally, we did gap above. This is novices potentially. They are chasing and buying the breakout above the prior highs. Wasn't huge volume though, but it was a large candle after we've already been moving up. We gapped up and came back down to shake them out. So there are a lot of clues, and I've got to wrap it up here pretty soon. If you guys got questions, let me know. But basically, when it comes down to reading price, like I said, there's quite a few things you could do, but keeping it simple works the best. And kind of combining all this together, looking at the overall color on your trend time frame to see, are you in a dominant bullish or bearish trend? What is the shape of the candles? Are you seeing buying pressure, selling pressure coming in on the most recent candles, predicting what's likely to start happening? Do we have the novices jumping in, or do we have professionals kicking off the trend? We can look at that on the trend time frame as well as the zone time frame. And then, of course, supply and demand with the trend is pretty much the crux of what I do when it comes to trading. I want to know, say, for instance, I'm looking at the S&P 500 today because I'm actually going to. It's another program that I run called SPX Cash Flow Secrets, where every day around 2 o'clock, I put in a trade to profit from the closing of the markets. So basically, what I'm going to be doing is, okay, this is a daily chart, a little too big, but I go down 240. I can see right now we're up around old selling pressure here. And we've dropped from there before. We do have a little bit more momentum this time, but what do we see? Is our trend strong anymore? Green, 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 red, red, green, red. No, we've got mixed colors. So we're getting weakness in the trend at this point, right? We're hitting an area of prior selling pressure. Let's see, where's it? Settings. No, there we go. So we are retracing down a bit from that rally that we experienced. We've actually retraced 23.6% already. May not be done. We'll see. But again, we came up into selling pressure. We see some weakness with the red and green. So we're starting to go a bit sideways. And I can start to fine tune this a little bit. If I drop down from that time frame, the 4-hour to 60-minute, we see we're losing momentum. Prices, we're trying to make new highs. Yeah. So at the same time, price is trying to make new highs, momentum is going the opposite direction. So that's suggesting that we're going to be pulling back. And sure enough, there's your pullback to 23.6 retracement. We rallied up again. We did make a high above 60 on the RSI. This is RSI, by the way, in case you're wondering. And it's slightly modified. Actually, that should be EMA. It's not going to make that much of a difference there, but I use 60 and 40 for overbought and oversold rather than the 70-30 is traditional. It just works better for me. Again, in the E-mini think tank, I have lessons on all that under fundamentals, how to use the RSI. Wrong one. So started pulling back, but notice the candles, bottom tails. That means there's underlying bullish pressure. So even though we've got that mixed red and green right now, we're hitting selling pressure from the 4-hour. We're not dropping because we have lots of buying pressure on these last 3 candles. So we're likely to be stuck a little sideways and may even squeak out a little bit of a new high today before the end of the day. So that gives me ideas as to where the prices are going to go. I could drop this down, say, to a 15-minute chart, and then identify zones to know where prices are not going to go, and I actually incorporate options on those. So, wrong one. Like I said, I go to this chart specifically and sell the SPX options for the close today, 0 DTE. And usually works pretty well. High probability opportunities, what I'm looking for. Anyway, that's what I got for you guys. Hopefully, I will see you again in the future, perhaps in one of the classes, my E-mini think tank or the SPX cash flow secrets. Posted the links there before. If you got any more questions, you can feel free to email us. You can best reach me at support@wealthbuildershq.com. The 15-minute chart. What on the SPX? It's looking like that with the retracement right now. So, all right. Yeah, I got to get going. I got to take care of a few things and get ready for that trade this afternoon. So have a great day, everyone. Hopefully you get what you want for Valentine's Day and spend some time with your friends, family, and loved ones. And trade safe, trade well, everyone. Take care.